Summit, hashtag West Africa Deals Summit 2023. Our first Microtalk is on leveraging impact investing to drive economic growth across West Africa. We have two speakers, one who's joining us virtually. He's Jean-Marc Kilolo, economist at United Nations Economic Commission for Africa, UNECA. He's joining us virtually, but here in the flesh is CEO of Nigerian National Advisory Board for Impact Investing. She spoke yesterday, and she's speaking again this morning. Etimore Glover. Can we bring her up on the stage with a nice, warm, energetic round of applause? And also announcing that I've now got missing keys. Yeah, so come and see me. I think it's a, yeah, so just see me and I'll give you your keys. So Etimore. The earrings, no, the person's walking around with one earring. Yeah. All right, Etimore, over to you. All right, thank you.
Good morning.
Morning.
I know I have 15 minutes, so the angel of death, please don't come near.
I hear you.
Good morning, distinguished ladies and gentlemen. I'm excited to be here again in your face. So before I start, I'll tell a little story. When we started our work in Nigeria about impact investing, we're so excited. We wanted to get everybody on board, policymakers, government, investors, etc., etc. So we went to one gentleman. He's the Minister of State's Budget and National Planning. And so we started talking, I was so excited about the opportunity, what impact capital can do in Nigeria, the kind of innovative financial instruments, we can unlock, what the role of the government is. And when I finished speaking, can you guess what he said? Nobody is trying. He said, "You're preaching to the converted." So, so this morning, if I'm going to be preaching to the converted, please just raise your hand and say, "Please, you're talking too much." So I just needed to say that first. All right. So that's said now. So we'll just go straight. Let me check my clicker and see how it works. Can somebody help me, please? Oh, great. How can I go back? All right. So the conversation is leveraging impact investing to drive economic growth across West Africa. And we'll just talk about impact investing and also the role of catalytic capital in our markets. I'd like to first start by saying that we all know that investments have consequences that goes beyond the individual investors. And you know that investment can be positive or negative, its impact, right? It can be positive or negative. That's why we see some investors, embracing international guidelines, that address ESG, economic, social, and governance, risk. And some investors will, not invest in some industries like investment in fossil fuel, tobacco, gambling, or no. But impact investing goes beyond risk management or risk mitigation or avoiding harm to harnessing the power of investments for social good as well as avoiding harm. So there are some key definitions or things that we look at in impact investing that distinguishes it from traditional investment, the intentionality, to generate positive and measurable impact, social and environmental impact, alongside financial return. So we'll take a look at some of the core characteristics of impact investing. The intentionality to make impact is so important, right? Which distinguishes from every other kind of investment. And investments with the expectation of financial returns. So this is not NGO, this is not philanthropy. There must be some financial returns. Now, the range of returns and asset classes, so as impact investing can be, deployed by any, investor, somebody who is interested, in making impact with your resources. It can be your cash equivalent, it can be debt, it can be equity, whatever it is. So it cuts across all asset classes. So institutional investors can deploy impact capital like banks, your PFAs, pension funds, family offices, etc. And then it can be below market rate, above market rate. It can be, it cuts across all of that. Finally, this is very key, very important. We must be able to measure the impact. So that's why impact investing is different from your traditional investment. And so this spectrum of capital kind of makes us see the sweet spot where impact investing sits. From one extreme, which is your traditional investments, that's your traditional invest. Did somebody raise her hand? Am I talking too much to the converted? So all right. So this is where your traditional investment sits, where the investor focuses on only receiving risk-adjusted market rate returns with zero focus or goal on impact. To the other extreme, which is philanthropy, purely philanthropy, where the philanthropic organization, I would say, doesn't mind losing all the money and focusing on 100% impact, right? Going back here, you see responsible investment or responsible finance. They try to avoid harm and also using some ESG principles to mitigate risk. So the focus here, the impact goal is to avoid harm and to mitigate risk so that their investment doesn't have, a negative impact on their stakeholders. Moving now to sustainable finance, which is great, but the impact goal is to benefit all stakeholders with their investments. But impact investing comes with the intentionality to contribute towards an identified social or environmental challenge and bringing solutions with additionality. So if that investment doesn't happen, the change doesn't occur. And you see that impact investing goes on to where, the returns can accept more risk, is quite concessionary from market rates, below market rates. Now, going to philanthropy, there are two kinds where the capital can be preserved and where the capital is totally lost. So catalytic capital we'll be speaking about for the past 2 days sits in the sweet spot below market rate to full capital loss. So who can deploy catalytic capital? Philanthropic organization, DFIs, those kind of organizations that do not mind, losing the capital or portion of the capital to support, third-party commercial investments. So I wouldn't speak so much about catalytic capital because we've heard so much about it yesterday. But our markets, where we are in West Africa, we really do need catalytic capital to bring in more third-party investment, to bring development to our markets, capital that can de-risk, commercial capital, provide first losses, etc. Am I? Okay, good. Good at time. So particularly, we have a huge financing gap across West Africa. In Nigeria, for MSMEs, for instance, I mentioned yesterday, we have about $152 billion to finance the MSME sector. In more recent studies, for example, agricultural sector is $182 billion US dollars, healthcare $3.3 billion dollars, and one more again. It's so huge. Is what I'm trying to say. However, if we do not get catalytic capital to spur development or to unlock private capital in healthcare, for instance, I think it stands about 82 billion US dollars. Really, I don't even know what to say, but there must be that intentionality because we do not have enough private capital spurring solving issues in those sectors. Now we understand that as a result of the COVID-19 pandemics, most of the gaps have been exacerbated, particularly in Nigeria. We found out that the primary care trust wasn't able to support, or to provide normal services that, that we require for our market. Mark you, we have 133 million people living in multidimensional poverty, and they all need access to basic services. Nobody's going to provide that, but we need catalytic capital to do that for us. Okay, it's not working. So I think, okay, good. So these are the five concessions or features of catalytic capital. The pricing must be right, it must be below risk, it must be patient, long term. The position subordinate comes last after every other investor has received their investment. Pledge, guarantee to bring in a third party investment, and then it must be purposeful. It must address a social and environmental issue. So quickly run through this. I mean, West Africa is a great place. We have some of the largest markets. Nigeria, for instance, is the largest market in Africa, largest population in terms of, the GDP growth rate. And I was really particularly excited when I saw I'll just quickly run to the next slide, the economic outlook by the IMF called the big funding squeeze. When I looked at all the indices of GDP for the West African country, we're not doing too badly as for West Africa, right? However, not to say I've been told my time is up. Not to say that we do not have our challenges, though, but there is prospect apart from Nigeria, where we have a forecast of a drop in GDP. Every other country's GDP is estimated to go higher. So we have the potential, to provide both financial returns of investment and then the impact because of the number. All right, Nigeria, I said largest economy in Africa. Demography, we have the population, you know, and if you look at also our challenges, we have about, 133 million people living in multidimensional poverty. There is huge impact, that can be made. Then if you look at sectors, the MSME itself is a great opportunity. We have close to 4 million MSMEs in Nigeria. They provide 80% of job opportunities. They contribute close to 50% to our GDP. So for those who are looking at gender, 41% of businesses in Nigeria are owned by women. So the opportunity is huge, but the gap is wide. How do we partner to ensure that we have the right capital, to support development in this country? I'm not going to go through this. I'm just going to run through some of the opportunities in Nigeria as well as West Africa too. First and foremost, it's large. Infrastructure. We need infrastructure. Huge investment in infrastructure across West Africa and Nigeria. Here, we are happy about this because our governments are waking up. They know the need for us to diversify. Investments have already started in diversifying the Nigerian economy and most economy in West Africa. Great time to partner with Africa. Then the Africa Free Trade Zone area, which positions Nigeria as well as every country in Africa as an investment hub. Then the entrepreneurial development, particularly in Nigeria, is a startup economy, right? So West Africa, Nigeria is a place for us to invest. And if there's anybody outside here, please let's sign up today to provide impact investing. Let us commit towards deploying impact capital, particularly collaborate to get catalytic capital to unlock more investment. Impact investing can do so much more. I mean, I know that impact investing has been mainstream. We've been talking about it, but here there's this gap. So catalytic capital will force impact investing to do much more. The slides will be shared. We'll look at some opportunities of how impact investing or impact capital has been deployed in our market and how catalytic capital has been able to unlock more third-party investment in Nigeria. So I have to stop here because the angel of death is looking at me. Thank you very much. It's been a pleasure speaking to you while I hand over to the angel of death. Thank you.
The angel of death is very kind before 9:30. After 9:30, he kicks into gear. Jean-Marc Lolo is economist at United Nations Economic Commission for Africa, UNICA. He's joining us virtually. But let's first of all just appreciate Timore for her presentation. And we hand over virtually to Jean-Marc Kilolo.
Thank you very much. Hi, everyone. I'm very pleased to join you virtually. I would like to be there. Hopefully, I will join you in person next year. So I'll start my presentation. Let me share my screen. All right? So the topic of this session is leveraging impact investing to drive economic growth across West Africa. So I'm from the United Nations Economic Commission for Africa. Our vision is to promote ideas for prosperous Africa. So we deliver ideas and actions for an empowered and inclusive and transformed Africa. I work with the private sector development and finance division, and particularly the innovative finance and capital markets. We aim to enhance capacity of member states to deepen financial markets and mobilize long-term investment for sustainable development. To reach this goal, we team up with United Nations teams in the country and development partners to deliver impactful and innovative projects for governments, regulators, financial institutions, and the private sector in Africa. So our work on impact investment at ECA, so far we have produced 2 reports for Cameroon and Cote d'Ivoire on the possibility of developing an inclusive bond to finance very small enterprises and informal sector operating in cross-border trade and artisanal processing. These sectors are among the priorities of the African Continental Free Trade Agreement and also are mainstreamed in the national development plans of both countries. So the inclusive bond structuring model that we propose has made it possible to determine the share of guarantees of the 3 stakeholders, governments, international financing institutions, and the beneficiaries, and also come up with a proposal as to the maturity of the loan and the interest rate for the investor. So now about West Africa. West Africa is a very dynamic region in sub-Saharan Africa. As one can see, it has the trend of its GDP per capita, which is a measure of the wealth created, is among the highest of the region in Africa, second after Southern Africa. And when it comes to growth, Western Africa has, for the last 5 years, displayed the second largest growth rate on the continent. In addition, in West Africa, the informal sector accounts for approximately 50% of the national output and over 80% of the employment. So this means that there is a potential to strengthen impact investment activities in Western Africa to foster economic growth. So now, a few words on the impact investing ecosystem. As we all know, impact investments are investments made with the intention to generate positive, measurable social and environmental impact alongside with financial return. So for this to happen, we need to address or respond to social needs and environmental needs, such as increased education, employment, reduced pollution, and also make sure that there is a demand for it as well as a supply. And then we have several instruments or actors that provide money. But for this to be successful, we need to have an enabling environment. Now, what is the state of affairs in Western Africa? So according to several studies, though West Africa is a fast-growing region in Africa, yet there is widespread poverty and inequality. So the main perceived challenges include lack of financing options apart from commercial banks. So we don't have many angel investors, venture capital, and private equity markets. So we need to really deepen the financial markets in order to harness all the potential of impact investing to really foster economic growth in the region. What has been noted also is that there is difficulty to meet bank or investor requirements in terms of, for instance, high collateral requirements for loan. What also restrain impact investment from giving its whole potential is also capacity gaps. We notice lacks into financial recording, record keeping, human and resources management are not sufficient. There are also problems related to governance and also marketing. So this make it difficult for investee to meet the due diligence activities or imposed by investors. On the demand side, we note also high costs of operating that hamper profitability. So that may make that investor will be reluctant to invest into impact investing activities. Now, on the supply side, what we note, according to a study, promising sectors in West Africa are energy, manufacturing, infrastructure, and also financial services that have been able to attract impact investing capital. But there are some barriers, such as the lack of investment readiness by companies. We may expand on that during the Q&A. Also, the policy environment is not adequate. This needs to be addressed. There is also difficulty raising capital. Macroeconomic and political instability also hampers impact investing in the region. And there is also challenges for measuring social impact. So this has to do with lack of capacity that we mentioned on the demand side. So about the environment, as I said, the environment seems to be inadequate. Bankruptcy regulation and enforceability seems to be a problem. So there are challenges to attract private equity, and there is an insufficient ecosystem to support, such as incubators, accelerators, and technical assistance providers. So we have also an embryonic financial system, which make it difficult for investees to get funding, and also low fiscal incentives. So here I've presented in a nutshell two sectors that are deemed to be profitable. The agri sector, which helps to reach few SDG goals, such as no poverty, zero hunger, and also improve life on land. As we said, it's a challenge for many impact in investing activities to really report on the attainment of those goals. So my final words: consolidating impact investment for growth. Aware of the impact of climate change, many investors want to make investments that mitigate this mega trend. Still, others concerned with achieving the SDGs are ready to forego the benefit of their investment in order to impact lives. In this context, impact investment is an opportunity for West Africa to increase investment that fosters economic growth while contributing to the achievement of the SDGs. Here are some promising interventions that can contribute to building the impact investment industry in Western Africa. We think of awareness building activities and also engaging enterprises on the value of equity through local partnership. Building also a track record of success through more consistent measurement will also foster impact investment for growth. it's also important to strengthen the ecosystem of incubators and accelerators. And we can also bank on African high net worth individuals and companies to enter the business. I thank you for your attention.
Thank you very much, Mr. Jean-Marc Kilolo with the UNECA for your micro talk.